Ladies and gentlemen, good day, and welcome to Carysil Limited Q4 and FY26 earnings conference call hosted by Go India Advisors. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinion, and expectation of the company as on date of this call. These statements are not the guarantee of future performance and involve risk and uncertainties that are difficult to predict. As a reminder, all participant line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Chirag Parekh. Thank you, and over to you, sir.
Yeah. Thank you. Good evening, ladies and gentlemen. Thank you for joining us for the Carysil Limited Q4 FY26 earnings conference call. I trust you have an opportunity to review our financial results and investor presentation, both of which are available in the company website and stock exchanges. Joining me on this call is Mr. Anand Sharma, our Executive Director and Group CFO, along with GIA, our investor relations advisors. FY26 marks an important inflection point in company's evolution as the company continues its transition from a quartz zinc manufacturer as a one-stop integrated kitchen and a bathroom solution company, expanding its global presence. When Carysil started its journey decades ago, it began with a simple vision to build a world-class Indian manufacturing company capable of competing with the best globally. From humble beginnings with limited resources and immense conviction, the company has built on the pillars of hard work, integrity, resilience, and long-term thinking. The country established its presence of about 50+ countries, a diversified product portfolio, respecting manufacturing capabilities, and long-standing customer relations across key markets. This foundation, built over decades of disciplined execution and focusing on delivery quality products embedded with German DNA. I'm pleased to share that despite its heavy headwinds marked by geopolitical uncertainties, trade volatility, inflationary pressures, tariff-related disruption, Carysil delivered one of its strongest operating performance to date during FY26, backed by total income growth of 14%, EBITDA growth of 31%, and PAT growth of 54%, while PAT margins after MI improved by approximately 274 basis points year-on-year. India and global manufacturing opportunity. India today stands at the pivotal stage of economic evolution, supported by its ongoing policy reforms, improving infrastructure, making India focus. The company has emerged as a credible global manufacturing export hub, strengthening trade relations with UK, US, Europe, Australia, and creating a very meaningful long-term opportunities for Indian exporters. India has entered FTA deals with major economies like UK, Europe, Australia, and New Zealand, in the process of signing FTA with USA, and also entered CEPA with Middle Eastern countries. India is poised to change the world order, provide credible option of global chain supply. Operational stability and margin outlook. Despite industry-wide inflationary pressure across gas, electricity, and raw materials during FY26, Carysil maintained stability and interrupted operations across all facilities without any major production disruptions. Stable labor availability, supported by deep employee community engagement, continued to remain a key operational strength. Carysil differentiated positioning and customer relationship, effective pass-through of costs, resulting in healthy margin expansion during the year. Increasing automation, operating leverage, and growing contribution from higher value categories will structure support profitability. Additionally, the growing business with marquee global customers like Lowe's, IKEA, and our new entrant Home Depot and other leading international retail partners expected to improve scale efficiencies and overall business quality over the long term. Business highlights. Quartz zinc business. The quartz granite zinc business continued to deliver a healthy performance in FY26, supported by resilient export demand and improving domestic traction, with volumes growing by approximately 21%. To cater to its rising demand, Carysil continued investments in mold development, automation, product renovation, and capacity expansion, with previously announced incremental quartz capacity expected to become operational in Q1 FY27 of another 250,000 units. While the company remains focused on quartz zinc, the company continues to gradually expand its presence across other kitchen adjacent categories. Stainless steel sink business continues to emerge as a key growth driver during the year, with value growing by approximately 20%, supported by strong OEM demand and exports. Also augments traditionally stainless steel manufacturing capacity of 70,000 units per annum from effective today, increasing the total output from capacity 180,000 to 250,000 units per year. To support long-term growth, the company has also acquired adjacent land for the future expansion and diversification to meet the demands of the big OEM players like Kohler, Hefler, Grohe, etc. Built-in appliances business gained encouraging traction by premiumizing trends, import substitution opportunities, rising modular kitchen penetration, and growing OEM interest. Also, the company has been able to have a breakthrough on the electronic modern trade retail chains. Under phase 1, Carysil has commenced a pilot manufacturing of hoods and hobs. Well, phase 2 will expand into hobs and ovens, food waste disposal, and other built-in solutions. The company will be investing in very sophisticated and highly advanced manufacturing technologies like glass cutting, forming, color coating, which is also plans to witness a growing interest of OEM, large global OEM players for increasing domestic manufacturing opportunities arising out of BIS-related regulation in India. Faucet business. The faucet business is also shaping as a quite an important growth category. Like I said last time, every kitchen sink needs a faucet. Carysil has commenced manufacturing of its stainless steel kitchen faucets as well as brass faucets, along with the powder coating color solution. And the last launched was our water RO solution, where you can have a drinking water, where my mantra was Har ek Bharatiya Carysil faucet se pani pina chahiye. We have that dream. The portfolio is aligned and evolved export standards across Europe, US, and other countries. We are already getting some encouraging responses from our global customers. On the export front, demand visibility improved steadily during FY26 across key international markets, following positive trade developments globally. US, Europe, Middle East, etc. are important growth regions of the company. Looking ahead, we are focusing on the market opportunities like Far East to boost our broader strategy, to deepen its global footprint, to diversify our export base. We also see a large opportunity in Germany and neighborhood countries in Europe, and we feel that we have not penetrated. We have still a lot to penetrate. Hence, we have hired a new business development manager based out of Germany. His job is to develop new customers in Germany to start with. The Middle East business continues to perform in spite of the geopolitical situations quite well. We are also expanding our branded stores across the Gulf region. We have a second store opening in UAE coming soon, very shortly. The company is also strengthening its presence in Europe, Southeast Asia, Australia, and other key Asia-Pacific markets and other emerging markets through distributor and strategic partnerships. Increasing traction from large format retailer institutional customers further reinforces management confidence on the export opportunity. The company's international subsidiaries witnessed to do healthy momentum in FY26. Carysil Incorporation USA achieved an operational break-even during the year by improving scale and stronger customer traction while improving strong margins. FZSLC of our UAE-based company continues its performance by healthy demand, expanding presence across the Middle East region. India business and online expansion. The India business delivered healthy growth, supported by improving retail demand, OEM traction, new product launches, deeper market penetration, and distributor expansion by broadening our sales team. Carysil continues to strengthen its domestic franchisee through investment in dealers, expansion, experience center, brand stores, modern trade, digital selling, and consuming initiatives with 4 model, franchisee owned, franchisee operated. Company also launched dedicated B2B vertical which was completely absent, which is going to target the top architects and builder institutions in India to scale up our sales in the B2B institutional market. Now, the most encouraging development is to see the strong traction in online business, which contributed approximately 5 crores during FY26 and is expected to scale meaningfully as consumer preferences increasingly shift toward digital home. The company has strengthened digital e-com to launch Carysil-led brand called Carysil for D2C model. With an expanding portfolio of faucets and other kitchen categories, Carysil witnessing cross-selling opportunities across India, distribution network expected to strengthen customer engagement, improve wallet share, and support long-term scale growth. One point I forgot to mention that on the company online, we have been able to crack upon the major alpha distribution with the largest e-com marketplace in India. And we see the e-com sales running into 2x, 3x for the current year. Carysil 2.0, building the future InnovExport 26. FY26, beginning Carysil next phase, is a clear strategic vision of making the largest kitchen hub in India, a dream of Make in India. Carysil building capabilities across sinks, appliances, faucets, and smart kitchen solutions with automation, quality, design, and brand building. Company also sees a strengthening its international business in key markets. The response to newly launched products InnovExport 26 and recent customer interactions has been highly encouraging and reinforces management confidence in the strategy. Company continues to invest across manufacturing, automation, development, in AI, digital capabilities, distribution expansion, international market, guided by a long-term aspiration of building a $1 billion kitchen business. Carysil believes foundation with this vision is steadily taking shape for disciplined execution and sustained investment across business. Now with multiple growth engines, now expanding simultaneously across exports, India, distribution, OEM partnership, alliances, new products like faucets, new channels, new digital channels. Carysil believes it has entered clearly the next phase of structurally stronger and more diversified growth. FY27 is expected to be a very important and a crucial year of execution, capacity expansion, and capability building. Now I would like to hand over the call to Mr. Anand Sharma, Executive Director and Group CFO, who will take you through the financial performance in greater detail. Thank you.
Thank you, sir. Good evening, everyone. Let me take you through the company consolidated financial performance for the quarter and full year ended FY26. Quarter 4 FY26 performance. Consolidated total income for quarter 4 FY26 stood at 237 crore as compared to 205 crore in Q4 FY25, registering growth of 16%. EBITDA for the quarter stood at 48 crore as against 36 crore in corresponding last year quarter, reflecting growth of 33%. EBITDA margin for quarter 4 FY26 stood at 20.3%, up by 277 basis points. Profit after tax and minority interest for the quarter stood at 27 crore as compared to 19 crore of Q4 FY25, growth of 42%. During the quarter, quad sink sales volume stood at 195.5 K, stainless steel volume stood at 44.6 K, while kitchen appliances and other volume stood at 8.5 K. Faucet recorded sales volume of 10.2 K units. FY26 performance. In FY26, consolidated total income stood at 932 crore as against 820 crore in FY25, delivering growth of 14%. EBITDA for FY26 stood at 185 crore as compared to 142 crore in FY25, reflecting strong growth of 30%, while EBITDA margin improved to 19.9% as compared to 17.3% previous year. Profit after tax and minority interest for FY26 stood at 98 crore as against 64 crore in FY25, registering healthy growth of 53%. The improvement in profitability was driven by healthy operating leverage, improved product mix, higher contribution from value-added products, and continued focus on operational efficiency across businesses. From the balance sheet perspective, gross debt stood at 270 crore as on 31st March 2026, while cash and bank balance stood at 59 crore. During FY26, company incurred total capex of 68 crore towards plant and machinery, capacity enhancement, automation initiative, more development, other infrastructure-related investment to support future growth. With this, we conclude the financial performance update. We will now open the floor for question and answer. Over to you, operator.
Thank you so much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question comes from the line of Naman Parmar from Dimeshai Investments. Please go ahead.
Yeah, thank you so much for the opportunity and congratulations on great set of numbers. So firstly, I wanted to understand on the UK market specifically. So how has been the demand scenario on that market side? And if you can break us the capacity on the UK market, because in UK market also, if you are manufacturing, then you also would be selling that to the US or the other region, right? So how much of the total capacity is situated in the UK market?
Okay, so I can answer. Thanks for the question. I'll answer the second question first. So the UK market is, the manufacturing is completely dedicated for the UK market only. That's one. Number two is, you see, is the UK, there is no doubt UK market is tough right now, but we've been doing, I think, quite well. Our team is on it. What we had a visit of our CEO last month, the Innovaxpo. And I think what is interesting part is, while UK is facing challenges, that whatever the results what we are giving right now is at the worst crisis the UK can face. It seems very clearly that UK is bottomed out. That's point number one. We are so resilient due to our low-cost model. And most of the products are being exported here from India to UK, that we feel that the opportunities are very large. So, for example, we have developed about 15 new customers in the last 3 quarters, which are big chains in the UK market, where Europe is not be able to sustain at a low price competition. So it is the things are tough, challenging, but the market, we are increasing our market share, and that's how we are sustaining in UK at this point of time. Yeah.
Okay. And what is the capacity in the UK market?
Capacity in sense?
For the cord sink and the stainless steel.
No, we are not manufacturing anything over there. We are only manufacturing solid surfaces. Yeah. We're not doing anything manufacturing. Yeah.
Understood. And lastly, on the Indian market, like if we see that there has been a very good penetration from 16% of the revenue, it has come a bit higher to 20% of the revenue. So like you mentioned about the e-commerce deal also, you are correct. So how has been the distribution network has been getting spun out over the, and what's your outlook for the Indian market going forward?
The Indian market is, I just touch you a broader picture. So I think it's very clear we want to touch our 500 crore sales within 5 years in India. As India, I think we are, as a brand and as a product portfolio, I think we are underperforming. I think we have actually not kind of shift our gears in India. This is the first time we are shifting our gears in India. So I think on a longer run, if you have to achieve a turnover of 500 crores within the next less than 5 years, we will have to grow at a rate of 30-40% year on year. And the company is, with all the expansion and what the new product launches with the new team, we will be at it. We'll be at it to see that we are now able to take away, to have a substantial market share in India.
Okay, yeah. Thank you so much for answering, and best of luck for the future.
Yeah, welcome.
Thank you. Our next question comes from the line of Vaidik Bafna from Monarch Network Capital Limited. Please go ahead.
Congratulations, sir, on good set of numbers. So my first question is on the Forex side. What kind of Forex gains have been recorded in the quarter, and how much of it has been impacted in our revenue and margins?
So Vaidik, we have 2.5 crore gain in the quarter four on the Forex side. And what was the next question? Sorry.
How has it impacted the margin?
How has that impacted our margins and revenue?
So a margin could be like, it's like less than 1%, 0.5%.
Okay. And on the top line front?
Sorry?
Top line.
Top line impact is this only, because whatever gain coming, Vaidik, that is reflected in the exchange gain. We are not changing whatever billing happened, that is all the same price which is on the date of the sales.
So what he's asking me, what is the incremental you got because of
2.5 crore. 2.5 crore.
Overall revenue. So I think I can answer that. So I think the Forex, the rupee has depreciated roughly about at 5 to 6%. I think that will be the sales gain what we have got. Yeah.
Okay, sir, got it. And sir, now second thing is on the cord sinks capacity, which is expected to come in this year. So by when should we expect this to come, and how much utilization do we see that we can achieve over here?
Yeah. We said it's going to be commenced. So we already started the ground digging and all that. So we are looking at to finish it by quarter one FY27. Quarter one 28.
28.
So a year
27.
Okay. Year FY20.
Next year, quarter one.
Quarter four. Quarter four 27.
Okay, sir. And sir, the recent capacity being added on the stainless side, and we can see that commissioning has started today. So, sir, this capacity expansion, sir, what would be driven over here as to have we added new clients or have we increased our wallet share from existing clients?
Both. We have increased our wallet share. We have also got some new export opportunities. And third, we have already mentioned like large players like Grohe, Kohler and Hefele also tied up with us. We already falling back on them capacity. So we already are having backlogs. So this increase in capacity would be mature within the next 90 days. So we have already started. Gradually it will start, but it will be matured in next 90 days.
Okay, sir, got it. And sir, last thing is on your guidance for revenue. Can we achieve more than 20% revenue growth in the coming years with new capacities on board? The very aggressive domestic expansion
Tough
plans
one.
for us?
Tough. It's a tough one, isn't it? For me to answer this. We are at it. Our growth guidance of between 15-20% right now remains in place with our 18 to 20% margin guidance. The geopolitical adversities are very, very strong. I cannot even say the future what it is, but we stick to our guidance, what we have mentioned before.
Okay. Sir, one last thing is on the gas issues which were there globally during the quarter. So what is your view over it? And also, sir, did we face any freight disruption in terms of exporting the products to US, UK or the UAE? Have we seen any increase in timeline of reaching the products to the final destination?
Yeah. So I think there's no question to answer the question two. There is no 100%. I think there is a lot of disruptions on freight, but team is managing well. Somewhere we have delays on getting the containers. Somewhere we delays of getting the ships reaching the customer. So that is there. I think that's going to be there, but that's something which is out of control on everybody's hand. But we are doing our best to manage it. And your first question was on the Cap, what was, I didn't understand.
Your CapEx, you are saying what?
Cap.
Cap.
We have a cap. Yeah. Can you,
Maybe can you answer the question?
Sir, my
Yeah.
first question was on the gas availability, sir.
Gas availability. So
Yeah.
currently we are getting 100% supply. So it was for only few week it was not available. Now it's 100% operational.
Okay, sir. Sir, thank you, sir. That's it from my side.
Yes. Thanks.
Thank you. Our next question comes from the line of Mudit Pincha from Cycles Investment Advisors. Please go ahead.
Hello. Can you hear me?
Yes.
Congratulations, sir, on a great set of numbers. My question is regarding the 5-year India revenue target of 500 CR.
Yeah.
So this year you did like 175 CR. So that means
Yeah.
roughly 25% CAGR for the next 5 years. Given the premium positioning of Carysil and active brand investments, don't you think this target appears quite conservative?
There is a big conservative. Usme kya hai? If it goes high, I'll go higher.
Okay, sir.
Because we need to be like, we are realistic. A lot of, we all know a lot of the adverse situations going around. So we have to be, and it is conservative, yes, but it is really a quite good growth. And even to do this growth, it is going to be challenging. It's not going to be easy with this because, we are at a kind of, what do you call, a launch phase to scale up our India. So I think once 1 or 2 years, if you have to achieve this, then I think the momentum is going to pick up. Yeah.
Okay, sir. So also you mentioned that the UK market has bottomed out. About the Europe market, Europe has been impacted by weak housing demand, inflation and higher energy costs and a softer consumer sentiment over the past few years. Given Europe is a key market for Carysil, how have the demand trends evolved over the last few quarters in sinks and appliances? Are you seeing any recovery in order inflows or customer confidence?
Good question. So first of all, I want to say Europe comprises of more than 20 countries. We are spread across 12 countries across Europe. Second, I've always been saying that most of our European competition has gone very weak because of this. So most of the market share we are taking of this with the large kitchen manufacturers and large retail stores. Point number 3 is that we have been suddenly seeing a good traction of orders coming from Europe. Now, whether it is, I'm sure it is to do more with the taking of the market share of our competition. But we slowly feel that things are improving in Europe as far as the kitchens are concerned. One thing Europe does not compromise is this kitchen. That is, every 4 to 5 years they change the kitchen irrespective of what it is. So that's the advantage you get when you are positioning at a premium segment of the market.
Got it. Thank you, sir, and best of luck for the future.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. Our next question comes from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Yeah, thanks for taking my question and congratulations on good numbers. So my question relates to India business. The Indian business margins are similar to the company level margin or they are at a development stage?
So I think as far as I think it is. I think our gross margins, our value addition are in few of the product categories even better than the exports. And that is thanks to the new value-added products that we have introduced. So on the net profit side, because of the higher marketing costs, we had a launch phase and we are recruiting new team, on a net level, it is lower than export. But moving forward, as we are able to get scale, the margin improvement is going to happen.
So any target for ad spend or sales development expenses?
Yeah, so we have sales. Yeah, so total we have marketing and development. we are benchmarking about 10 to 10% of our sales. And we are sticking to that. If any of the 1 or 2 quarters on exhibitions happen, that is like a one-time cost, minus that, we will be benchmarking 10%.
Okay, sir. Thank you. Great.
Thank you. Our next question comes from the line of Pragyam Ladha from Omni Securities. Please go ahead.
Good evening, sir. Congratulations for a good set of numbers, and thank you for the opportunity. Sir, my question is, I really want to understand, like, majority of our revenue is coming from export market. What all risk mitigation techniques did we use that we posted such good numbers? The first question is this.
What is the?
What we are doing to get the good numbers?
What is it? Good, right? Yeah. Sometimes you do good numbers, still it's a problem. Yeah, I think, great trust relationships what our company has built over this period of time, and that is what the result is. That's number one. Second is, we have been very persistent on getting the new customers like Lowe's, Home Depot. Just giving you an example that I've been going there in the United States and playing golf with them for last 15 years. Like I've come back tan myself under the sun. So there is, no pain, no gain. You got to burn some tire. I think it's a persistency what our company has done to gain these new customers. Third is the exposure and the visibility of our company as we are able to reach scale, as we are able to penetrate to large and well-known OEM customers. The more the visibility of our company as a brand is coming, and that is adding a lot of trust. And fourth and the last thing is that we are really ahead of the curve in terms of technology, quality, and in terms of price. So we are probably the lowest cost producer in premium category of granite sinks and now also in the stainless steel. So I think we are earning that. A very strong reputation on it, and I think based on these 4 pillars, I think we see that the next 5-year ride is going to be quite good. Yeah.
And we are not facing any issues in Q1, like any freight disruptions or delays in shipping the products?
It is. No, it is. The disruptions are happening. Delays are happening with the container. That's how it's not with us, it's with every industry. So I think for some short time, I think we got to deal. Customers understand, so we have to deal with it.
Okay. So second question is, currently, if I'm not wrong, our appliances capacity is around 50,000, if I'm not wrong. And we are increasing it by 50,000 by FY28, right? So, do you see it ramping up in phases? Like, will any capacity come in FY27, or will entire capacity be operational in FY28? And what would be the utilization in the first year?
Yeah. So, we are actually erecting a brand new plant for appliances of this. We are in touch with some very large international companies for a collaboration on this. And I think soon we'll be closing on that. And based on that, a complete new assembly line will be in. The one what we have of 50,000 hoods is more of a pilot production what we are doing. So to answer your question, the whole capacity increase of 100,000 units, it is going to come with additional 100,000 units to this. 50 plus 50. So 100,000 units total. So it will be 50 plus will be 50,000 to start with. That's phase 1. That's going to come in FY28 only. Hello?
Thank you.
Okay.
Our next question comes from the line of Anupama from Ratnatraya Capital. Please go ahead.
Sir, how much of capex is required for this 50K units of appliances that we are talking about, or how will you manage this?
So overall, the capacity what we are building the infra, we are building for about 200,000 units. The first phase is 50,000 units. The total infra cost right now, it is coming at about 30 to 40 crores. Yeah, with the building and the assembly line. Yeah.
Okay. On the quartz capacity, sir, you said it will be coming on Q1 FY28. I understand. So
No, sorry. It was... No, sorry. I would like to... Yeah. Finally, I did clarify. It is Q4 FY27.
Okay, sir. So our capacity is going from where to where right now in quartz?
Yeah. So we are increasing to 250,000 units. It will be 1.25.
Okay. And we do expect this capacity to get utilized within 2 years, or how do we look at it?
I think right now, looking at what the business traction is, let us see how we do. But I think it will, let's see, probably in a year's time, maximum. If things go really well, I think we can really do it in less than 6 months.
Okay. And
Anupam, I'm sorry to interrupt you, but you may please rejoin the queue for more questions. Thank you.
Sure, thanks.
Ladies and gentlemen, in order to ensure that the management will be able to address all the questions from the participant, we request you to kindly limit your question to 2 questions per participant. If you have a follow-up question, please rejoin the queue. Our next question comes from the line of Sagar Jetwani from Phillip Capital PMS. Please go ahead.
Yeah, congratulations on a good Q4. Just 3 questions actually. What led to 50% growth in volumes in stainless steel on a YOY basis? And even there is a good amount of jump in sequential volume. So that's my first question. Secondly, can our margins improve, more than 20% if we grow our revenues by, say, 18 to 20%? So can we achieve some good amount of operating leverage at this rate of revenue growth going ahead? That is second. Third, would you be able to provide a margin for kitchen appliances and faucet business?
Sure. So I'll take a question. First is the scale in the stainless steel business is launching of high products and strong demand for that in the Indian market. And secondly, we started the OEM supplies to brands like Haefele and Kohler. So I think that's where we got the scale, and that's why we are expanding our capacity. Point number 2 is, yes, I think it is going to be a volume-led growth and margin expansion potential is there. At the same time, we need to see there are a lot of geopolitical issues going on, but our margin guidance will be staying at 18-20%. If things go really well, then yes, there is a potential of margin expansion when the geopolitical situation normalizes. But our obviously endeavor is there that we try to do better than what we have suggested. That's 2. Third is on the margin side. So I think on the kitchen, the kitchen hoods and the faucets, I think moving forward, is going to have the best margins. Approximately it's doing at about 50 to 60% gross margins, and the new products, which we plan to have a gross margin guidance between going to be around 60%. I think that's what we're going to do.
Lastly, how are MMA prices? Last question.
MMA prices are on a rise. They are increasing, which is, they say, is at a short level, but they have stopped increasing. That's a second good thing. So the bad thing, it has increased. Second thing is they have stopped increasing. And third thing, good thing that we have mostly been able to pass on to our customers.
Currently, how much are they? Sorry, just a follow-up.
We'll have to... $2.5. Yeah, so I'm just saying the MMA price is increased by about 30% or something. Approximately 30-35%.
Sequentially?
So during the last quarter, it increased by around 25 to 30% in last 2 months.
Understood. Thank you and all the best.
Thank you.
Yeah.
Next question comes from the line of Disha Jain with Ethos Growth Ventures. Please go ahead.
Yes. Hi, Chirag. So I just wanted to ask, how should we think about the sustainability of the current margins across cycles? What would be the separation between the product mix and operating leverage benefit versus the raw material tailwinds like MMA, if that happens?
Yeah. So I can answer all the. I think, I think, like I said, it's going to be like a volume-led growth. I mean, the company, the new tie-ups what we have done, to all the, whether it's stainless steel or whether it's a quartz zinc, I think we are having good operating margins and gross margins for both the product lines. Our company is also moving into a lot of technology disruption, like we are introducing a lot of automation. So it's going to be a big operating leverage. So I think it's going to be it's going to be a mix of a product mix, high margin product mix, and with automation, operating leverage, which will drive the forward. And the third is that the innovation. We're doing a lot of innovation within our company. So, for example, we have got a breakthrough in 2-3 big technology advancement in quartz and in the stainless steel, which is going to significantly, in one of the cases, reduce our manufacturing costs, and in one case, we're going to improve our sales price. So that is, that is something we were been trying to achieve for a long time, and our team, I think, has done a great job in this. Basically, we're trying to do is that once you want to achieve scale, you need to try to touch upon the new landscape and horizons which our competition is into. And that means you need to try to match with that price. And secondly, you need to come out with not just pricing, but in Europe and United States, you need to come with a more better material which your competition is making. So I think that's where we have got the breakthroughs in that, and we would be driving growth, as one of our growth drivers would be that.
Thank you so much.
Yeah.
Thank you. Our next question comes from the line of Pragyam Ladha with Omni Securities. Please go ahead.
Sorry, sir, my line got disconnected. So, sir, the next question I was about to ask is the surface revenue going to remain in the same line, growing at like 5-6% every year? Is it going to be the same?
Surface business. You're talking about surface business growth?
Yeah, surface.
So right now, UK market, as I said, is bottomed out. I think it's going flat. US, we have seen in the last quarter quite a significant improvement. And what it is, the sales have grown by 10%. So if we've been constantly innovating this, launching new high margin products over there. So I think we are, like, for example, our next year AOP budget is about 10% increase. So I think we will be looking at about a 10% growth, targeting 10% growth, and we can land up about 7-8% on the surface side. Yeah.
Sir, our current appliance and faucet sale for the year was around 75,000. I just want to understand that our capacity is 50,000, but our sales is 75,000. How does it math out?
No, that is a segment where appliances, faucet, and others are added together. So appliances, when you're talking appliances, only appliances. There is another capacity of 50,000 for faucets. So that includes everything.
Oh, okay. Okay, sir. Okay. Thank you.
Thank you.
Thank you. Our next question comes from the line of Kush Shah with Vivo Commercial. Please go ahead.
Am I audible?
Yeah.
Hello. Yeah. Hi, sir. So my question would be regarding the fixed asset side there. How much would be the fixed assets are going to be increased in the following years, apart from the CapEx that you had announced?
So we have CapEx plan of around 70 to 75 crores for this financial year.
And for the following years, is there any plan of another CapEx for FY
No, we have not yet
20?
decided. We will review that in quarter two, and then we'll decide for the next financial year.
Oh, thank you, sir. Thank you. That's all.
Thank you.
Thank you.
Ladies and gentlemen, due to the time constraint, that was the last question for today. I would like to hand the conference over to the management for closing remarks. Thank you, and over to you, team.
Yeah. Thank you, everyone. I hope we've been able to answer all your questions satisfactorily. However, if you need any further clarification or want to know more about the company, you can please contact the GI team, our investor relation advisors. Thank you. Jai Hind.
Thank you so much, sir. Ladies and gentlemen, on behalf of Goinda Advisor, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.